Welcome back. Now let's get into that market discussion and conversation. Then, as I said a little bit earlier, you saw the market in negative territory, unfortunately, should I say. The big thing has certainly been the Federal Reserve and their desire to perhaps help the U.S. economy in terms of the recovery. Fed Chair Jerome Powell not necessarily giving out some nice words with regards to how long this might last for. Let's chat then to Viv Govender, who joins us right here. Then he is from Rand Swiss. Viv, thank you so much for the time. Really appreciate it. The interesting element here is that we were waiting for them to give out that growth figure as well. They see a negative 6.5% growth figure for the United States economy. Really dire situation, I suppose, overall.
Yes, I mean, we were a bit optimistic last week when we saw that surprisingly good unemployment number. Yes, there were some caveats there. You were seeing, of course, still, some, I think artifacts of the way they collected its data. The unemployment rate wasn't quite as low as they'd said, but it was better than anticipated. And there was hope for a V-shaped recovery, but the Fed has come and dashed that entirely. But there were also some interesting things that the Fed said. One of them was the fact that they don't think that they have too much power to increase inflation, or they don't want to overestimate their ability to increase inflation, which is quite weird for the Fed or a central bank to say. The other thing they said was they don't really care about asset prices going up. They care about unemployment. They care about keeping inflation under control. And if those two things are happening, they really don't care about a bubble in the asset price.
So do you think QE continues for some time to come?
According to them, until at least 2022. They think, this literally a quote, I think it was, they're not even thinking about increasing interest rates.
Sure. That tells you that they're going to stay at near zero for
years.
At least 2 years minimum,
yeah.
Right?
And the thing is that, in fact, obviously, the problem is that historically, when you have these kind of really low interest rates, people know that there's going to be no real increase in interest rates coming through. Asset prices do start to bubble higher. And in fact, there's an article, I think, written by Mohammed Al-Aryan, and he basically called it the Fresh Prince of Bubbles. As opposed to Fresh Prince of Ballet. But basically, look, I mean, this is going to cause asset prices to go higher. Yeah. And so those that are thinking that the stock market rally is overdone, maybe in a bit for a surprise here, even though today is a bit negative. But I think if you have asset prices, also you have interest rates at, say, 2 year, 3 year, and at zero effectively, and you have the Fed willing to intervene in the market anytime they see unemployment or growth below par. You are going to see asset prices taking the best benefit of that.
Yeah, what does that sort of mean then for the rest of the globe, particularly if you have a Fed that continues to try to pump money into that U.S. economy when needed, as you said as well, and interest rates sitting at those low rates?
Oh yeah, I mean, generally it would be positive for all asset prices globally, basically, especially listed asset prices, because that's where money can flow to most easily. But you expect asset prices everywhere in the world. I mean, it's not quite true economically, but a simple thing to think about is that the price of something is the amount of money divided by the amount of stuff. Not quite true, but that's a way you think of it. Not the amount of money is going ballistic, so you can expect the price of some stuff to go higher because of the amount of money coming into it. And so asset prices, especially like I said, listed asset prices should be higher because of that eventually.
Yeah. What do we say then with regards to the interest rates? And I only ask because we've got very low interest rates, lowest on record. We've got the US sitting at pretty much zero rates for most elements as well. Europe has got even negative rates in some instances as well. It's addictive. It's addictive to have that sort of thing as well. Could this take us backwards in the sense of getting to credit issues where the market begins to really sit with a big problem with regards to credit?
So the problem is that in economics, one of the things you learn first off is that when you have mispricing of something, you always have failure. You don't price in externalities, you have pollution. You don't price in certain things, you have problems in the market. If you don't price in the cost of money, you're going to have issues somewhere in the market. And those issues are going to flow into things, for instance, last time it was housing prices. This time, who knows what it might be. It could be, for instance, corporate debt. It could be, bubbles in, the example I'd give you is there's a company called Nikola. Like Nikola Tesla. Tesla is the car company. This is another electric, vehicle company. And their stock prices have gone ballistic. That's weird. I mean, there's even a company with the name Fang in it, and it's some Chinese company, and somehow that stock price has gone higher, and people think it might be associated with the fact that the Fang stocks have gone higher, and somebody's buying, incorrectly. And you see the stuff from Robinhood and so on, where you're seeing people almost playing the stock market like a game. Without a pricing for money, it becomes more of a speculative exercise, and you do create these bubbles in the market effectively.
Yeah. Is that why we're so down today, including the rand getting that weakness as well, more than 2%?
No. Yeah, I wouldn't expect the rand to be, or the market to be this negative. I think the fact that we saw the estimate for growth being as weak as it is, that's going to be quite negative across the world, I think. But I think that once you get past this, the fact that the money is flowing in is going to cause, stock markets and to rise globally, I would think.
All right. Well, we'll certainly get interesting and we'll see how things fare on that front. Viv, appreciate the time. Thank you so much for that. Viv Govender there from Rand Swiss joining us here at the Johannesburg Stock Exchange, helping us unpack that market movement. It certainly does shift and change along. That is it from here at the Johannesburg Stock Exchange.